Imagine this for a moment. A successful UK company running completely above board suddenly finds its director barred from their role and facing criminal proceedings. Why? All because of a new rule they just didn't know about. Now, this isn't just a scary story. It's a very real risk heading into 2026. If you're running a British company from anywhere outside the UK, you need to know that the rulebook has been totally rewritten. To help you get your head around all this, we're using guidance developed by the expert tax advisors at Pro Tax Accountant, one of the UK's most trusted accounting firms. So let me just ask you straight up. Are you a director of a UK-registered company, but maybe you live in Dubai or Singapore or the US? Perhaps you're a tech entrepreneur with a UK subsidiary, or you run an e-commerce business with a London address. If any of that sounds familiar, then what we're about to cover is absolutely essential for the future of your business. You see, a new piece of legislation is now in play, and it completely changes your legal obligations. And this isn't just a minor tweak to the paperwork. We're talking about mandatory digital identity verification for every single director, strict new deadlines that are coming up fast, and some pretty serious penalties if you don't comply. It's a massive shift, and you really need to get ready for it now. And to make sure you're getting the most accurate and practical advice possible, we're working directly from guidance put together by the team at Pro Tax Accountant. You know, these are the folks on the front line, helping businesses like yours deal with these changes day in, day out. So you can be sure that what you're hearing isn't just theory, it's practical, real-world advice from people who really know their stuff. Okay, so here's what we're going to walk through. First, we'll look at why this is all happening, this new era of scrutiny. Then we'll get into the nitty-gritty of who has to verify and the deadlines you absolutely cannot afford to miss. After that, we'll cover your practical options, your 3 paths to verification. Then, and you'll want to hear this part, we'll uncover some of the hidden tax and banking risks that go way beyond just getting verified. And finally, we'll wrap it all up with a clear, actionable checklist to keep you right. Right, first up, a new era of scrutiny. So why is the UK government making these huge changes right now? What's really going on behind the scenes? Well, it all boils down to this one piece of legislation, the Economic Crime and Corporate Transparency Act. Now, I know that sounds like a mouthful, and it's easy to dismiss it as just more bureaucracy, but it really isn't. This is a fundamental change in how the UK polices its companies. The whole idea is to make the UK's corporate register, Companies House, one of the most transparent and trusted in the entire world. And understanding why they're doing this is really key. This isn't just about creating more red tape for honest business owners. It's about cracking down on serious global crime. For a long time, the UK was seen as a bit of an easy place to set up anonymous shell companies for things like money laundering. This new act is designed to slam that door shut, protecting the UK's reputation as a safe and credible place to do business. It's all about making sure that the name listed as a director actually belongs to a real, accountable person. Okay, so we know why it's happening. Now let's get to the part that directly affects you. Section 2, who has to verify and when? This is where a lot of people get caught out because the rules are deliberately broad and the deadlines are set in stone. So who exactly needs to do this? Well, the net is cast very, very wide. It covers all company directors, and it doesn't matter if you live in London or Los Angeles. It also includes persons with significant control, or PSCs. A PSC is basically the ultimate owner of the company, the person who's really pulling the strings, even if their name isn't on the director list. And this even applies to directors of foreign companies that just have a registered branch in the UK. Bottom line, if you have any significant sway over a UK company, you need to verify. Now these dates are the ones you need to circle in your calendar, maybe in big red ink. From November 18th, 2025, anyone who's appointed as a new director has to get verified before they can be registered. For everyone else, all the existing directors and PSCs, you've got a transition period, but you must be verified by November 2026 at the very latest. The crucial takeaway here is that the clock is now ticking for everyone. And let me be really clear about what's at stake here. The consequences for ignoring these rules are, well, they're severe. This isn't just a slap on the wrist. We're talking about hefty fines, the very real threat of criminal proceedings for the director, and, critically, you could be completely barred from acting as a director for any UK company. That could stop your UK business dead in its tracks overnight. Okay, so how do you actually go about getting verified? What are the practical steps? The good news is you do have options. It's just about picking the right one for your circumstances as a non-resident. Let's look at the 3 main ways to get it done. This table really simplifies your choices. First up is the direct digital route using the gov.uk One Login service. This is quick and free, but it usually needs a modern biometric passport, and you'll have to use a smartphone app to scan your face. The second path, and this is probably the most important one for most overseas directors, is to use an authorized corporate service provider, or ACSP. Just think of an ACSP as a registered agent, like your accountant or solicitor, who's approved by Companies House to verify you. The big advantage here is that they can accept a wider range of ID documents. The third option, popping into a UK post office, is only really an option if you're going to be in the UK with your original documents. For most of you watching this, the ACSP route is going to be your best bet. And here's a pro tip that could save you a world of pain. If your passport, your ID, or your proof of address aren't in English, then using an ACSP is pretty much essential. They know how to handle the complexities of foreign documents and can sort out certified translations that meet the strict UK rules. Honestly, trying to do this yourself could easily lead to rejections and weeks, if not months, of frustrating delays. So let's say you've done it. You've gone through the process, you've got your shiny new verification code. Job done, right? Well, not quite. Stay with me here, because this next part can directly affect your company's tax bill and your own personal finances. This is where things get really tricky. You see, getting verified just proves who you are. It doesn't solve the other, often much more expensive compliance traps that a lot of non-resident directors fall straight into. So what are these other traps just waiting for you? Getting this next bit right is what separates a well-run UK asset from a ticking time bomb. Here's where most people get tripped up, and it's so important to get this straight. There are two huge but completely separate tax risks. Think of it like this. One risk hits your company's wallet, and the other hits your personal wallet. On one side, you've got company tax residency. Get this wrong, and your company could suddenly owe UK corporation tax on all of its profits from all over the world. On the other side is your personal tax liability. This is about you, the director, potentially owing UK income tax on your earnings, even though you don't live here. They're both serious, and you need to manage both of them carefully. So let's look at the company risk first. The test HMRC uses is called Central Management and Control. This has nothing to do with where your company is registered on paper. It's all about where the big strategic decisions are actually made. Holding a board meeting in a London hotel? That's a pretty obvious red flag. But it can be much more subtle. For example, if a key director joins a board meeting from their laptop while on a trip to Manchester, HMRC could argue that control was being exercised from within the UK. The burden of proof is on you to show the control happens outside the UK, which is why keeping meticulous minutes of all meetings held abroad is absolutely vital. Now, let's talk about your personal wallet. As a director of a UK company, you're legally known as an office holder. This means for any work you do while you are physically in the UK, you're taxed just like a regular UK employee. Think about it like this. You fly into London, you attend one board meeting, and then you fly home. That single act of doing your job on UK soil can create a personal UK income tax liability. Your UK company would then legally have to set up and run the payroll system known as PAE, or Pay As You Earn, just for you. It's a massive compliance headache that catches so many people out. And as if the tax risks weren't enough, there's another really practical problem. Just getting a UK business bank account can be incredibly difficult. In this new era of scrutiny, it's not just the government that's getting stricter. A lot of UK high street banks are now really hesitant to take on companies with non-resident directors. Their internal Know Your Customer checks, or KYC checks, are just much more complicated for them, so often it's just easier for them to say no. And that can leave your business in a really tough spot. Right, we've covered a huge amount of ground, from new laws to hidden tax risks. So let's try and boil all of that down into a simple, clear checklist to help you focus on what you need to do next. Here it is, your 5-step action plan. Step 1, identify every single person in your company who needs to do this. Step 2, choose the right verification route for you. And again, for most non-residents, an ACSP is the way to go. Step 3, gather all your documents well ahead of time. 4, complete the whole process long before the final deadline to avoid any last-minute panic. And finally, step 5, secure your unique verification code and make absolutely sure it's properly linked to your directorship at Companies House. And that really brings us to the big question you need to be asking yourself. This new era of corporate transparency in the UK isn't going anywhere. So with all these changes, is your UK company a well-managed strategic asset?
Or is it slowly becoming an unmanaged liability, just waiting to cause you a serious problem? Getting this right is about so much more than ticking a box. It's about protecting the entire future of your UK business. Now, before we finish, I have to share this important disclaimer. The information we've talked about today is for general guidance only, and it's based on the rules as we understand them in February 2026. Tax and company laws are complicated and they do change, so please don't rely on this for making financial decisions. You should always seek professional advice that's tailored to your own situation before you take any action.
If you want to make sure your business is 100% compliant and you want to navigate all of this with confidence, I really would recommend speaking to an expert. For advice that's tailored specifically to you and your company, you can get in touch with the team at ProTax Accountant. Their details are right there on the screen. Thank you so much for your time, and be sure to subscribe for more updates on staying compliant in the UK.